What is dental insurance? Dental insurance is a financial assistance provided by an employer based on cost savings in partnership with an insurance company who's in business for profit to provide benefits for basic and preventive dental care. There are different types of insurance, whether it's indemnity insurance, PPOs, which is preferred provider, where the patient must see the provider on their list in order to get reimbursement for services, or something called capitation. Regardless of what the choices of dental insurance are, it is a system in the practice that does not have to be loathed, take up a majority of the time, and be labor intensive. It can be managed and maximized through understanding how to communicate the value of dentistry first and the dental benefits second. If you look at dental insurance and the parties involved, and the team can be educated on how to communicate consistently about the value and the truth of dental insurance when they're engaging in communication with the patients on a daily basis, this will help a practice overcome insurance dependency. What are some rules of thumb for the dental practice to move away from insurance dependency? Rule number 1 is anytime a patient says they have insurance or they have help for their dentistry, we need to respond with a positive affirmation statement on how lucky or fortunate they are to have help with their dental needs. Second rule is for the clinical team not to offer estimates or predeterminations in the clinical area as a mode of asking for a decision from the patient after the clinical presentation is completed. The predetermination and estimate decision is a decision made in the business office, administrative area, by the business team upon closure of the accepted dentistry as a way to inform the patient what assistance they are going to receive based on their individual policy negotiated by their employer and the insurance company. Rule number 3 is for the team to be clear on every facet of the 4 roles in the insurance relationship and continually and confidently communicate that as many times a day as needed. If we look at the roles in the insurance relationship, the first role is the employer, and we know that employers want to provide some assistance for their employees to maintain their overall health in regards to dentistry. Their number 1 priority in creating a benefit package is cost savings. The second role in insurance is the insurance company. They are in business for one reason and one reason only, is to honor the benefits chosen by the employer at the highest profit possible. The third role in the insurance agreement is the patient. The patient is the policy holder and is the one that needs to drive any issues they have with individual benefits provided in their policy. The practice, the fourth role, we're a third party to the insurance benefits provider of optimal dental health. If you believe that every patient who walks through your doors, regardless of benefits determined beyond our control of the dental practice, deserve the right to know what dentistry has to offer so they can make their own choices with creative, flexible financial options to help them pay for the difference that is not part of their benefit packages. And the last rule of insurance dependency is acceptance of the facts that dentistry's fees have increased incrementally over the last decade. Dentistry's expenses and overhead has increased incrementally, and insurance annual maximums have stayed the same or declined. The gap between the progressive growth between the benefits and dental fees is vast. This is active patient information if Chuck wants to use it for the practice scorecard. Active patients. What is an active patient in dentistry? Well, our number of active patients, if we knew nothing else about the dental practice, is one metric and number we must know in order to plan for today and for the future growth that every dental practice deserves. An active patient is defined as a patient who sees you as their dental practice and has been through your facility doors within the last 2 years. Any patient that's been to your practice in the last 2 years, unless they've passed away, called to have their records transferred, is considered a patient, active patient of record until proven otherwise. Your number of active patients drive many business decisions in the dental practice. It drives your hours of capacity, your number of treatment rooms needed to service your patient base, the number of team members to service the customers and the patients that walk through your doors, your number of days that you would be open, your financial policies, your case presentation strategies. Active patients are the key to a viable practice. The average general practice working 4 days or 32 patient hours a week needs at least 1,800 to 2,000 active patients with well-run systems for retention and recall to make sure that we don't lose the patients through the crack and they are honoring the interval that is best for their oral health. The benchmark, this is for the dollars per operatory explanation for an insert into the Practice Monitor scorecard with Chuck. The benchmark of $200,000 per equipped treatment room in dentistry is a general benchmark for the doctor and for the hygienist. The $200,000 benchmark is evaluated by taking 32 hours of patient hours a week times 48 weeks a year, equaling 1,536 patient hours in an annual time frame. If we were to look at the dentist and we were to say, what's the minimum dollar per hour goal of a dentist, we can use the new grad amount of $250 an hour. If you were to calculate 1,536 available hours times $250 an hour, you're going to get close to $400,000 in production or revenue. For the dentist, we divide that in two because we know that a dentist ideally should work from 2 treatment rooms, and each treatment room can divide the revenue and the income proportionately, providing they have systems and advanced scheduling in place. For the hygiene treatment room, if we took the 1,536 hours, which is 4 days of hygiene a week, 1 full-time hygienist, and we set the hygienist's goal at a minimum $125 per hour, that calculation on an annual basis is close to $200,000. So the dollars per treatment room is a generalized, educated way to open the conversation when we are uncomfortable asking the customer, the dentist, what it is that they produce. Remember, $200,000 per equipped operatory is not an overperformance or even an average performance. It is what we call the bare minimum that each equipped operatory should be producing on an annual basis. If you look at a treatment room and you take a treatment room or operatory at a range of cost of $45,000 to $55,000 to completely stock and equip a treatment room, and then you look at the other metrics in the practice, the return on investment of that $50,000 expenditure for a return of $200,000 in the first year, even if it takes 2 years, is one of the soundest, most predictable purchases in dentistry today.